We're at a defining moment in global finance. The convergence of traditional financial services and blockchain technology holds the potential for a fundamental upgrade to our financial system, one that will make markets more transparent, more efficient, and more accessible for everyone. While many of you in this room and those joining virtually have been working towards this vision for years, we believe now is the time to begin working more closely together to make this vision a reality. Before we dive into the future, let's take a moment to talk about the present. Today's financial markets are an incredible invention, hundreds of years in the making. They've fueled global economic growth, democratized access to opportunities, and enabled wealth creation. Yet, for all their strengths, they're still plagued by significant limitations. Limited transparency, high costs, slow settlement, restricted market hours, walled gardens, and manual processes. And these limitations have real-world consequences. Many of us in this room have accounts at a variety of financial platforms: Robinhood, Wealthfront, Coinbase, Bank of America, and so on. Each of these platforms keeps records of user ownership in siloed systems, and the underlying bank deposits, securities, and crypto settle on distinct rails. This fragmentation has a number of issues. Moving assets between platforms is cumbersome and slow, taking days, if not weeks. You can't use your assets across platforms interoperably. For instance, there's no way to take out a loan that's cross-collateralized by assets on different platforms. And because of this, there's a high degree of lock-in at any particular platform. For retail investors, you can't shop for custody, trade execution, lending, and so on a piecemeal basis from different providers. And while these challenges are frustrating and expensive for those of us in developed markets, the consequences are far more severe globally. Billions of people around the world lack access to high-quality financial assets altogether, leaving them excluded from the benefits of modern finance. FinTech has tried to address many of these challenges, but its solutions have been largely cosmetic. Take Plaid, for example. It connects different financial platforms by essentially logging into their front ends and using their APIs on your behalf. While helpful, this is really a patchwork solution that doesn't address the root cause: a fragmented, outdated financial infrastructure. What we need is a fundamental upgrade. Blockchain technology presents a fundamental solution. Bitcoin was the first digitally scarce asset that could be accessed by anyone, anywhere in the world with just an internet connection. And decentralized finance, powered by smart contracts, breaks down the siloed records and platform lock-in of traditional finance. With DeFi, your assets are stored on shared blockchain ledgers, enabling you to move your assets from protocol to protocol seamlessly with just a single click, and for any wallet or application to be able to take any action with your permission on your financial assets. Ultimately, what public blockchains and DeFi enable is access. Access to own, use, and create financial products and services wherever you are, whenever you want. Yet, DeFi exists today as a largely closed system focused on crypto speculation with little connection to the real economy. And that's where tokenization comes in. Tokenization makes it possible to combine these benefits of blockchain and DeFi and apply them to traditional finance. Stablecoins were the first successful tokenized asset, with over $200 billion worth circulating on public blockchains. We believe the success of stablecoins comes down to one word: access. In this case, access to a high-quality, stable store of value like the US dollar. While we in the US often take this access for granted, for billions of people around the world, the ability to hold a self-custodied, stable store of value that can be transferred instantly and cheaply 24/7 is game-changing. At Ondo, we started our journey into tokenization by asking, how can we make stablecoins even better? The answer? Tokenized treasuries, or as we call them, yield coins. Like stablecoins, they're accessible globally 24/7 and programmable on-chain, but they also pay holders a yield. Our first product, OUSG, targeted institutional and high-net-worth individuals in the crypto ecosystem, making it easy for them to go back and forth between stablecoins and US dollars, and to use yield-bearing assets as collateral in on-chain financial protocols. In order to demonstrate this utility, around the time we launched OUSG, we also developed Flux Finance, the first on-chain treasury repo marketplace, allowing OUSG holders to pledge their tokens as collateral and borrow against them. Earlier this year, with the help of BlackRock, we enabled instant minting and redemptions for OUSG 24/7, and we reduced the minimum from $100,000 to $5,000, broadening access even further. While these innovations were great, access to OUSG was still limited to institutional investors. And that's why we launched USDY, the first freely transferable yield coin, designed to be usable in DeFi and accessible to retail investors outside the US. Since then, we further broadened access, expanding USDY across multiple chains, including Ethereum, Solana, Sui, Aptos, Mantle, Arbitrum, and Cosmos. We also built the Ondo Bridge to enable seamless transfers across them, and we helped to integrate USDY in a number of DeFi protocols. And our chain expansion efforts will continue. We recently announced that OUSG is coming to the XRP ledger, and we're excited to also announce today that USDY is coming to Stellar. The success of this focus on accessibility and the demand from users for these types of assets is undeniable. We have the broadest distribution of any tokenized cash equivalents and over 700 million in TVL. Just as important to us, our products also have, by far, the largest number of holders, representing more than 80% of all tokenized treasury holders. Over the past couple of years, since we launched OUSG, we've also seen countless other asset issuers, many of whom you'll hear from today, also issue yield coins. And while that's been happening, we've been using our early scale and distribution to help these other issuers offer 24/7 stablecoin redemptions to their clients. We announced this initiative a few days ago. We're calling it Ondo Nexus. And to enable this functionality, we've diversified our backing beyond BUIDL to also include tokenized treasuries from Franklin Templeton, Wellington, FundBridge, and WisdomTree. We love this example because it highlights so much of what we've been talking about, enabling instant redemption, improving access in time to more people, improving access in reach via more providers, improving access in choice, all enabled by the composability of tokenized assets. This is the future of finance. This industry-wide focus on yield coins has led to material growth. Since the launch of OUSG just 24 months ago, yield coins have reached over $3 billion in assets, taking just 22 months what took stablecoins 59. And we view this as an early success. Bringing financial markets on-chain is a massive undertaking, and we love working with partners to help us on our shared mission. While we're excited by all of this progress, tokenized cash is not enough. The on-chain economy still remains almost entirely disconnected from traditional finance. The building blocks for broader real-world asset tokenization are finally in place. Stablecoins and yield coins have paved the way, core DeFi primitives have been battle-tested, and regulatory clarity is on the horizon. But we are at a pivotal moment. For many years, our industry has loudly touted blockchain's potential to transform traditional finance. Yet beyond stablecoins, there's been little real impact. DeFi in particular remains a casino for meme coins and other tokens with little to no fundamental value. With a new administration in place, I believe we have a 2 to 3 year window to achieve meaningful adoption for tokenized real-world assets beyond stablecoins, or risk DeFi remaining disconnected from the global economy indefinitely. The question then is, what assets outside of tokenized cash make the most sense to focus on? Tokenization of other assets has been attempted countless times with little to no traction. For many years, the thinking was that if you tokenize an illiquid asset, like private funds or loans, because tokens can be transferred cheaply and easily, that you would magically make these assets more liquid. This is a fundamentally flawed thesis. In reality, it's not technology that gates the formation of more liquid markets in these assets, but rather other factors like info asymmetry, pricing difficulty, lack of fungibility, and resistance from issuers. Instead, we believe that the assets that benefit the most from tokenization, at least right now, are those that already have deep liquidity. These are large, in-demand, easily priced assets, like the US dollar, that can benefit from tokenization to make them more globally accessible and usable as collateral in on-chain financial protocols. That's why, just a few days ago, we announced the coming of Ondo Global Markets. At its core, Ondo Global Markets is a tokenization platform designed to bring publicly traded US securities on-chain. The platform will enable investors outside the US to gain on-chain exposure to thousands of US publicly traded stocks, bonds, and ETFs. And we're not only going directly to end investors. We are particularly focused on working with distribution partners, both in traditional markets and in crypto. In traditional markets, we're working primarily with fintech broker-dealers outside the US that want to upgrade from their old-school brokerage-as-a-service platforms to a tokenized backend to save dramatically on cost and to reach new users. In the crypto space, wallets, protocols, and other exchanges can leverage global markets to offer their users access for the first time to publicly traded US securities. Here are just a few of the benefits that Ondo Global Markets will offer. Global access to over 1,000 public stocks, bonds, and ETFs. Instant minting and redemption of tokens. Full liquidity. Token holders will have access to the same liquidity they would have access to if they held the underlying securities. Access to TradFi margin. Token holders will also be able to access margin at rates typically only available to clients of institutional prime brokerage desks. Free transferability. These are bearer tokens, similar to stablecoins or USDY, that can be transferred freely outside the US in secondary markets. And finally, usability in DeFi. We are highly focused on fostering an on-chain financial ecosystem where these tokens can be used as collateral. Ondo Global Markets has been designed from the ground up to address many of the issues we previously discussed: limited access, high fees, and annoying transfer restrictions. It should be noted that these are actually the same issues that existed with dollar-denominated bank deposits before the issuance of stablecoins. And this is not a coincidence. We've used many of the same principles from stablecoin design to inform what we've done here. It is no exaggeration to say that we believe that what stablecoins have done for the dollar, Ondo Global Markets will do for securities. We believe that with the success of yield coins and the launch of Ondo Global Markets, we're entering a new phase in financial markets. Unlike many, however, we don't believe that this new phase need operate outside of regulations, destroy incumbents, or fundamentally change the way markets operate. Instead, we believe that this phase represents the next stage in the evolution of financial markets, where the best of DeFi and the best of TradFi combine to create markets that are more transparent, more efficient, and more accessible. You might call it a foundational upgrade. We call it Wall Street 2.0. Just like with stablecoins, it's likely that the people who will benefit most are those in emerging markets who have little access to financial markets today. But over time, as the benefits are proven and regulatory clarity is gained, adoption will also grow in developed markets, including in the US. While improving access to US financial markets is good for global investors, we also believe it is good for America. Greater access to US assets will allow the global demand that already exists to finally be met, bolstering asset prices and providing companies with cheaper financing. As you can tell, we're tremendously excited by Ondo Global Markets and the coming of Wall Street 2.0. We really look forward to discussing with all of you here today about how we can make the promise of Wall Street 2.0 a reality. But first, we have one more thing. See, as we began fleshing out the design of Ondo Global Markets and spent time with institutional partners, we realized that today's public blockchains just didn't have the features and capabilities necessary to truly make this vision a reality. To name a few examples, liquidity fragmentation across various chains, high-risk cross-chain bridging, volatile transaction fees, volatile network and protocol security, and regulatory and compliance concerns with front-running and unknown transaction validators. Historically, some of these issues have been addressed through the use of permission blockchains. However, it is precisely the closed-off nature of these networks that nullifies what we see as one of the most compelling promises of blockchain technology: an open, global, and transparent financial system. Over the past year, we've been working hard with various partners to develop infrastructure to address these challenges while preserving openness. Today, we're excited to finally announce our new Layer 1 blockchain designed specifically for bringing financial markets on-chain. We call it Ondo Chain. Ondo Chain will be a hybrid public permission chain, combining the openness of public blockchains with the compliance and security features of permission chains. To share more about OndoChain, I'd like to introduce Ian DeBode, our Chief Strategy Officer. Ian used to lead digital assets at McKinsey and has been working with our institutional and crypto-native partners to make sure that OndoChain meets their needs. Please join me in welcoming Ian.
Hi, everyone. Good morning. It's great to see so many familiar faces in this room. It is my absolute pleasure to present to you today a piece of transformational and foundational infrastructure that is really designed to bring all of you, and I'm really looking at the biggest institutions in this room, on-chain. Now, why are we developing another blockchain? There's quite a few of them out there already. We are intimately familiar with that. So it's a great question to ask. Well, when we set out to build the Ondo GM platform, we really set out to build something that could combine the best of both traditional finance with its incredible deep liquidity and investor protections with all the benefits of DeFi, with its open access and innovation and new primitives. However, as we set out on this mission, we realized that the necessary conditions to really bring these two worlds together really did not exist. The infrastructure to bring these two together really was not present. We ran into a variety of issues, many of which I think will sound pretty familiar to the people in this room. First and foremost, securities don't really work that well with DeFi. DeFi was not designed with securities in mind, right? Stuff like stock splits or even dividend payouts. The smart contract accounting really cannot handle those issues very well. We had experienced this with our own assets, OUSG and USDY, but as we were thinking about scaling our own footprint to literally thousands of assets, we realized that the status quo just couldn't work, right? We needed a new ecosystem focused on RWAs. More on that later. Second, cross-chain asset management and managing the liquidity between all of those different blockchains, it's quite challenging. At this point, it's pretty clear that the future of crypto will be omni-chain. But issuing your assets on each chain in a compliant way and managing the liquidity between these various blockchains, that takes quite a lot of time. OUSG and USDY are live on 10 different chains. We have a full team of blockchain developers and ops people that manage that around the clock. Again, when you're thinking about scaling to literally thousands of assets, it just doesn't work. Third, and this one does not receive nearly as much attention as I personally think it should, inadequate security and cost. Running your network security and other critical components, even like oracles, powered by a cryptocurrency token that is incredibly volatile, that's actually a pretty expensive way of doing things and not necessarily the best security robustness that you want. This may be fine when you're dealing with cryptocurrencies on-chain that are in and of itself incredibly volatile, but when you're thinking about scaling literally tens of billions of real-world assets on-chain, that's not the best security model. Institutional-grade on-chain capital markets really do require a more stable and robust security model. And last but not least, the lack of institutional participation. I'm sure that one sounds very familiar to a lot of the people in this room. And there's very good reasons for that, right? Typically related to regulatory and compliance reasons. But it does make that there currently is not a very tight coupling between on-chain and off-chain environments. And that ultimately significantly degrades the investor experience that's possible on-chain. Now, allow me to illustrate that last point in a little bit more detail. Imagine the Ondo GM experience that could be if you actually had a broker-dealer powering the on-chain economy and being able to participate in the on-chain economy. When an investor would like to purchase a security, they would simply declare their intent on-chain. A broker-dealer would pick up on that intent, go and acquire that security in one of the traditional exchange venues with incredible deep liquidity, mint the asset on-chain, but probably not stop there. On an ongoing basis, this broker-dealer would publish the asset prices on-chain, just like they do in traditional finance, and post a proof of reserves on-chain. They could do all of that significantly cheaper than what exists today and with better investor protections. So we ultimately realized that that really is the Ondo GM experience that we want and that our investors deserve. But it clearly requires institutions to come on-chain and create a much more tighter coupling between on-chain and off-chain environments. As such, we realized that in order to build Ondo GM in the way that we want, and in the way that investors deserve, and in a way that scales, most importantly, we needed to create an environment that institutions can actually run, and with it, create the underlying infrastructure that so many in this room have been waiting for all the years that I have known you. Enter the Ondo chain, a fundamental rethink of how institutions can participate on-chain and how RWAs can be scaled on-chain. The Ondo chain combines the best of public permissionless blockchains with private permissions chains while addressing the issues that I mentioned previously. Some of the core features that it will have are, number one, real-world assets as a gas token, and staking collateral. This one's a big one. This means that the Ondo chain will enable the staking of high-quality liquid assets, real-world assets, and a little bit of crypto, but mostly real-world assets. The network will be proof of stake, but powered by real-world assets. This means that the network security of the Ondo chain will be much less volatile than other crypto networks, and the associated cost to run the chain will be significantly less. This also means that you as an institution can participate and run a node just with the assets that you're already holding on balance sheet. But this way, you may be even to earn additional yield on them. This also means that you as an institution can actually run a node without ever having to touch crypto. I'm sure that will make some people in your compliance and accounting department extraordinarily happy. Finally, gas fees are going to be paid with real-world assets as well, ultimately just providing for a better user experience and investor experience. Secondly, the Ondo chain will be run by a permission validator set. This means that only known and reputable and often regulated institutions will be allowed to run a validator. This also means that when you as an investor come on-chain, you can rest assured that your transactions are not going to be front-run, and you can enjoy similar protections like you do in traditional finance. And last but not least, vote extensions. The validator set of the Ondo chain is not just going to validate transactions. They are also going to do other critical functions like publish the prices of an asset on-chain, verify the collateral that is backing on-chain securities on an ongoing basis, and sign off on bridging transactions whenever they're requested. By designing the Ondo chain this way, we enable it to do, or we achieve, a few things. First and foremost, it can support a much more cost-effective and scalable investor experience for real-world assets on-chain. The Ondo chain effectively eliminates the need to pay for and assume security risks of different providers of chain security, Oracle security, asset security, and bridging security. The Ondo validator set will take all of this on. And fundamentally, when you think about it, when you're dealing with a real-world asset, as opposed to a cryptocurrency, your underlying trust assumptions are already incredibly different. The Ondo chain just builds on these different trust assumptions and aggregates a lot of those critical functions that you find on the blockchain all into the Ondo validator set. By doing this, it allows RWAs to come on-chain in a much more scalable and cost-effective manner. We can also support critical actions like the minting of an asset on-chain when the security has been purchased off-chain with significantly lower latency. Second, the Ondo chain enables RWAs to be truly omni-chain for the first time. It will be the first blockchain to connect both into public blockchains as well as traditional TradFi environments. As a result, the Ondo chain is really built to be a distribution hub. You can issue your asset on the Ondo chain, connect it into your TradFi environment to service it, bridge it to any other public blockchain that you want, while still managing your assets across all the chains from one spot. Developers, similarly, will be able to build their applications on the Ondo chain and seamlessly connect into other public blockchain networks, but also TradFi environments to ultimately optimize liquidity in their own applications. Last but not least, the Ondo chain will catalyze a new ecosystem focused on real-world assets and DeFi. This ecosystem will allow for concentrated innovation to happen, both for protocols, but also at the wallet level, to really invest and optimize the user experience for financial services and RWAs on-chain. For the first time, it's also going to be possible for real-world assets to have the same utility, liquidity, and performance as traditional assets in other channels. Historically, this has never been possible in other ecosystems. By innovating into the design of the chain itself, for the very first time, RWAs are going to be able to tap into crypto-native primitives such as staking. This will open up the door to new products and innovations and sources of additional yield that can even be passed on to traditional investors. With that, we're incredibly confident that the launch of the Ondo chain will be a pivotal moment in the evolution of on-chain finance and bringing financial services on-chain. For the very first time, developers are going to be able to attack so many different financial primitives, whether that's margin, repo, swaps, staking, robo-advisory, prediction markets, wealth advisory more broadly, but do it across crypto and securities and real-world assets, all on one chain. I'm personally incredibly excited to see what a global group of developers and the types of innovation that they're going to be able to drive to really upgrade our system and innovate in a meaningful way on how financial services are done 24/7 globally. But make no mistake, this will be a long process. Even with the right infrastructure, bringing institutions on-chain, it's going to take time. A lot of you in this room will require different regulatory guidance before you can actually do that. We're aware of it. But I am personally very confident that when you decide to do so, we will have made the infrastructure that makes that process as seamless as possible. And I am very confident in making that statement because the Ondo chain is not developed just by Ondo itself. We're incredibly fortunate to be advised in the design of the Ondo chain by many of the logos on this screen. A special thank you for those of you who have already joined us in our mission and have committed to helping us in the design of the chain to make sure that it meets the requirements of all the institutions in this room. And for those of you who are still on the fence, come join us. It's going to be a lot of fun. Thank you.
Thanks, Ian. We're obviously incredibly excited to finally be able to share with all of you what we've been working on. You'll now see that our work on Ondo Global Markets and Ondo Chain are not separate initiatives, but deeply interconnected components of a broader strategy to bring capital markets on-chain. Global Markets, providing seamless access to tokenized securities, and Ondo Chain, providing the infrastructure to enable their access, security, and utility at scale. Of course, we're not building the future of finance alone. Right after this keynote, we'll host a fireside chat with BlackRock, leaders in traditional asset management who share our vision for this new world. Later, you'll hear from asset managers like Franklin Templeton, Fidelity, WisdomTree, and Wellington, banks like Citibank and BNY Mellon, and financial infrastructure firms like MasterCard and the DTCC. You'll hear from blockchain innovators like Ripple, Chainlink, and Uniswap. These groups have already shown what happens when you remove barriers and let digital assets flow freely. Now imagine what they can do with tokenized real-world assets. Finally, you'll hear from regulators, along with a surprise guest, about what the future of all of this might look like here in the US. This is the time to build, to experiment, and to collaborate. Together, we can shape a financial system that's fair, faster, and more accessible to all. Welcome to the future of finance. Welcome to Wall Street 2.0.